This is our Forex block for April 26, 2012. And like most days, we want to buy the strongest currencies versus the weak and sell the weakest versus the strong. This is our currency meter that we released about a week ago that uses our build your own trend tool, which allows you to set it any weight and any time frames you want. And we pretty much have about 55% of the weights using tools that measure the percentage of, in this case, dollar pair going up or down, and then about 45% weight to intensity. Just like with force equals mass times velocity, Forex trends equal, pretty much the percentage of pairs going up or down times their intensity. And that's what this is. Force equals mass times velocity, basically. And underneath that, we have the percentage of currencies above or below the 15-minute bars, 20-period moving average, percentage of currencies above or below the hourly moving average, and we have the daily, weekly, monthly trend. Obviously, if you see the dollar and the yen both having strength today, you'd rather buy the yen because the percentage of currencies going up on the 15 and hourly chart are much stronger, and the daily, weekly, and monthly is all up. You can see this got really, really strong right here at 516. So what would you trade it against? Well, you would ideally want to trade it against the weakest one. The euro is the weakest at the time, so you want to sell the euro yen. It's that simple. And as you can see, this coming up to 5, the euro yen's underneath the hourly. We're looking to sell it. Notice how our trailing stop caught every single pip of this, maybe except for 10. It got you out of this at 86, and it went down to 77. It caught every pip of this less than 10 pips. And you can also use our range chart, which I think are vastly superior. Let me scroll back and look at this chart. Notice it got you, our trailing stops got you in here at 49 and out at 98. And then if you got short again here, you made a few more pips as well. It didn't quite get you stopped out. And you can see the build your own trend on here. Extremely weak. Let's look for some other trades. Strong yen. The New Zealand started getting weak, and the weekly monthly trend's down. When you see a lot of weakness followed by the pullback phase of about half the strength that the previous weakness had, if the weekly and monthly trend and ideally the daily trend's down, it doesn't matter if the 15 or hourly trend is up, because usually it's going to shift, and you can see it started to shift right here around 6:30. You want to sell the New Zealand yen, and so here's 6:30 when those shifted, but earlier we had a weekly and monthly trend down. I like to sell currencies when they're above the hourly and kind of not doing much. When they break down underneath the hourly, it's usually a great place to go short. You might have also sold here and here. You always want to draw your fibs on the first wave, and the fib target is a great place to get out. Notice it went maybe a pip or two beyond the 1.618 fib target. Our 3.0 green containment bands, which I'll show you what they look like, in my opinion, over 90% of the time contain price. And if it does go 5 to 15 pips outside it, it usually reverses within an hour. With the very rare times that happens. So this is a 3.0 containment bands. And, these are areas where the market typically hits and reverses. The Swiss was also weak today on most time frames. Not quite as weak as the New Zealand was, and the CAD also went really super weak here around 840. Extremely weak. The percentage of currencies above, or I'm sorry, in this case below, their 15 and hourly trends, and the daily trend shifted down. Pretty high probability CAD yen sell after 830. Here's 830. The trend came down. You're looking to sell it right here at 36, and our trailing stop got you out at 13. So you made about 20-something pips. Now, a lot of new traders, volatility recently has been less in many of these currency pairs than it was a few months ago. But, 10 pips per day, 50 a week, 200 a month, doubles your trading results every 2 months. There's our planner. Start with a $2,000 account, getting 10 pips per day. Every 8 weeks, 2 months approximately, it doubles. 4 months in, your $2,000 account's now 8, 17, and you can obviously see it grows to astronomical amount because of the power of compounding. Everyone knows the power of compounding, but most people get to a level where their account, if they make a certain amount of money during the month, they take some out to live with, those who are professional traders that trade for a living, and then they put the rest of it in, longer term accounts. Let's look for one last trade here to finish today's blog. We'll do it against the dollar. The dollar also, you can see, got really strong here around 5:30. The percentage of currency shifted up. However, the very vast majority of them were still underneath their hourlies, and the daily, weekly, monthly are down a lot. Sometimes currencies get down so much that you see a brief amount of strength right here. You don't know if the counter trend move up is going to shift all the trends up, or in this case, the 15 shifted up and the hourly shifted up and then shifted back down here at 10 o'clock. But earlier in the day, pretty high percentage of dollar pairs were going up on the 15. If you want to trade that against the euro also by selling the euro dollar, by all means you can, especially at 5 o'clock right here. Previous day's high, this currency had broken out. It had a failed breakout. Usually when the previous day's high acts as resistance, it breaks out, comes back, acts as support. If it doesn't get a bounce off of that support area, it's going to fall. And you can see it fell from about 35 all the way down to 02. Again, the New Zealand also shifted to a downtrend, so you could have also sold the New Zealand dollar, although it always pays to trade a weak currency against the absolute strongest, and it's pretty clear that the dollar is not the absolute strongest. You can still do some quick 15 to 25 pip type trades, but you can see when this dollar really started getting strong here at 5.27, very high percentage of them shifted from downtrends to uptrends on the 15-minute trend. The New Zealand dollar at that time, it fell from 70 all the way down to 30. When it's above the hourly, it's kind of a risky thing to sell. Usually that acts as support. Sometimes it's very strong support and the trend continues up. Anytime a support area gets hit and you don't get a bounce, what normally happens doesn't happen. When it breaks down underneath there, it's a pretty safe place to short. 53 is short out of this trade at 47. Pulls back up here. Notice there's no strength. Anytime you see a move down with a lot of weakness, the move up with no strength, and it goes sideways like that, you might short again here at 46. Draw your fibs off the last little mini wave, and it's a good place to get out of the trade. Notice I only went a pip underneath there.